All right, we're recording. Lyn, great to see you. How are you?
You as well. I'm good. How are you?
Excellent. Well, we are well, and I know you know that Lauren will ask you the first question. You faced down Lauren and Caitlin last time. I went back and watched that. Mike, Lyn, that was 2020, I think. Wow.
Wow.
Yeah,
It's been a long time.
it has. And some of the stuff we were talking about in that interview is just crazy how fast it moves. We were talking about like the grayscale, Bitcoin trust, premium, like all of this kind of stuff that doesn't matter anymore. Like it just doesn't exist anymore. But anyway, it was fun to go back and see. Right, Lauren, what is your question?
What stops this train?
That's a good question. I think nothing stops this train.
All
And
right,
of course,
that's the interview done. Thank you, Lyn. Nice to see you again. That's as much information as we need. Nothing stops this train. Say goodbye, Lauren.
Uh,
That's all the listeners need to know. Like Bitcoin is going up forever, Laura.
uh,
Lauren.
uh.
So go on, go ahead. Yeah, go on, Lyn. Embellish, if you would.
sure. And for people that don't know the context, I use that phrase a lot. Primarily, I use it around U.S. deficits to argue that it's going to be much harder than they think to reduce deficits, and that those ongoing deficits have various implications for investing and in general the economy. Um, and so I think that 4 years from now, like you mentioned, we talked 4 years ago. I think the one thing that will be kind of the same 4 years from now is people will still be talking about the deficits. I think a lot of things will change in 4 years, and that probably won't be one of them.
Now I've got to ask Lauren a question here, and I'm going to have to bring you back in here, Lyn, because this is the whole point of you asking the first question. Do you understand what Lyn means when she's talking about deficits?
No.
Okay, then you have
What?
to
Yeah.
ask.
Okay. What is a deficit?
A deficit in this context is when the government spends more money than they get in with taxes. And so they either have to fund that deficit by issuing debt or by just printing money or some combination of both. And so the US government and most governments around the world, but in this case, the US government is spending a lot more out of the economy. It goes to retirees, Social Security, medical services, it goes to interest on prior debt, it goes to the military, it goes to all sorts of stuff, and they're spending a lot more um, than they're taking in with taxes. And so we either accumulate debt and therefore later generations struggle with it, or we print money and the risk there is inflation. That price inflation follows because we're debasing our currency.
Oh, it's a lot more depressing than it sounds.
Can you believe that's how governments work?
Uh,
Like, what would happen to you if you spent more? I know you don't earn money, but I give you pocket money, or you earn money from doing the podcast. What would happen to you if you were just spending money and like no money was coming in?
well, I'll go broke. I'll go into debt.
Pretty much exactly that. But governments do that on purpose and then try and create money out of thin air. Sound legit?
Like unfair?
Yeah.
Yeah.
All right, we're minting a new Bitcoin here. I think she's already there. So you can't do that in Bitcoin. That's the point.
Yeah.
Right.
I got
Okay.
that. Don't worry.
All right. So do you have any further questions, Berlin?
Uh,
Oh, conferences you were going to ask.
yes. I was gonna ask. What was your favorite conference last year?
Favorite conference last year? I think Madeira was pretty interesting. Never been there before. It's a pretty interesting location for me, visually. And also it's a pretty high signal. I actually skipped the big Nashville conference. Um, at first, I wasn't sure my schedule was going to make it me be able to go. But then even when I could go, I just thought that's too big and too hectic. I tend to like smaller ones, or if I go to big conferences, I like smaller side events at the big conferences. So I think for me, the sweet spot last year was Madeira. What about you? Did you
Yeah.
attend any of them?
Yeah, we attended Madeira, Prague. Was Riga 2024, 2023?
We didn't do Riga last year.
Oh, right. Oh,
We saw you in Oslo
oh yes, Oslo.
for the HRF. We also
Did-
went to Bulgaria.
Oh, did we go to England? Didn't we do something in England?
Yeah.
Oh no, that's yeah, we
It was a meetup.
yeah, no, went to we went somewhere in England recently. Was that
Let's move on.
okay?
Bristol.
Bristol. Yes.
Yeah, it was a meetup in Bristol.
That was a meetup. I thought that was a conference.
Well, very big meetup, very tiny conference. Lyn would have loved it. Come to Bristol next year, Lyn, as an open invitation. But I do
I did
remember.
I did go
remember.
to Bedford.
Oh, that's right.
That's
Yes.
yeah.
We missed that one, and we'll miss that one again this year, unfortunately. But I did see you put out a tweet or a post on Nostr about how you're going to be dialing back conferences this year, almost to zero. But if you're going to Bedford, there's one, obviously, which yeah, I understand the reasoning because they can, like you say, they can get very hectic and very tiring, and there's a lot of travel involved if you're going to all of them. With us, we go as a family, and that is great fun. But they do become tiring after doing too many. But I do remember I had the honor of introducing you on stage on one of the panels in Madeira, and I hope you remember the reception that you got when you came out because I certainly do. You got a great.
I'm always surprised. I'm always humbled and surprised by how that goes.
Well, and I had Preston on recently as well, and he said the same kind of thing. And it's just so nice to see that the people in the US who have been making a lot of content, writing a lot about Bitcoin, a lot of educational resources out there about Bitcoin. We're watching you guys, and when you come across to our side of the pond, it's so nice that you give up that time and you make that effort, and it's a long journey. And it was just so nice to. Same with Preston to see the response he got, and with Sailor obviously, and with yourself and Jack and so many, and both Jacks, Mallers and Dorsey that came. That was number one conference of last year for sure, and it won't be another one until 2028. Were you aware of that?
I did hear they're going to do a 5-year schedule. So
Yeah. Well, the same kind of. 'Cause it was just before the halving, so they're going to do it again just before the next halving. So
makes sense.
yeah. All right. Well, thanks, Lauren.
Thank you for having me. Have a good day. Bye bye.
You too. Bye.
Right, Lyn. I just listened to you with Danny on what Bitcoin did, and you guys did a great deep dive into the macro of everything. And so I don't think there's any real need to go over that because why cover old ground? And so I was looking around, like what's on Lyn's mind, what's she talking about, what's on her radar, and I gotta say, would you allow me to read one of your posts on Nostr?
Sure.
So it was in response to Jack Dorsey. So this is like I think it looks to me as though it's your last post on Nostr. So who's watching the watchers was the question from Dorsey, and the video underneath of Larry Ellison, who's the founder of Oracle, who to my absolute disdain, disgust, surprise, the words coming out of his mouth about mRNA, cancer, technology, injections, and AI, and whatever else at a press conference in front of Donald Trump, I couldn't actually believe it. And then, so Jack's posted, who's watching the watchers? And he's put the video underneath of Larry Ellison talking about goodness knows what. And you responded, I'll tell you ahead of time. The watchmen are retarded. They were retarded for the Middle East. They were retarded for the Patriot Act, and they're still retarded now. Don't give them information. Pressure them every step of the way. Assume retardation whenever possible. Mock them when a meme presents itself. I mean, this is savage Lyn. This is amazing. So can we dig into some of this stuff?
Sure, I like to be a little spicier on Nostr. It's always fun to kind of put stuff on a decentralized social media, especially because like when I have a large Twitter audience, so I'm always a little bit mindful what I post there. Whereas Nostr is a little smaller, a little bit more fun to just kind of like shoot from the hip a little bit. My main point there is that there's kind of this arc of centralization that happened where people became very trusting of authorities, and they could be government authorities or they could be major corporate authorities. Um, and that's clearly not paid off in many cases. Um, and we see that not just in the US, but obviously the US has the biggest kind of consequences for what people in positions of power do. Um, and I think going forward, people often assume that, say, if you just elect the right person or you just have the right person doing something, that it's going to work out. Whereas I think what happens in practice is we kind of bounce back and forth between two sides of similar coins in many cases, and that you really, at the end of the day, you have to kind of trust yourself, trust the people around you. And then luckily, we have decentralized technologies that allow us to interact in ways that sometimes let us go around these big hubs of power.
It's I think sometimes as well, this word technocrat gets thrown around a lot. And I'm not exactly sure that people really understand what a technocrat is or what they believe or what a technocracy is. And it certainly seems to me as though when I look at what's going on in the US right now, there's a technocracy being built. Would you agree with that? And actually, I'll just read for the listeners in just directly from Wikipedia what a technocracy is. Technocracy is a form of government in which the decision makers are selected based on their expertise in a given area of responsibility, particularly with regard to scientific or technical knowledge. Technocracy follows largely in the tradition of other meritocratic theories and assumes full state control over political and economic issues. Obviously, it goes on. What I'm seeing, though, and we'll get into the thread that I wrote recently, is pretty worrying, to say the very least. And I keep tweeting out, reminder, digital ID was always the ultimate goal. Where are you kind of landing on what's happening in the last, well, 5 days? Because here we are at time of recording, just after the inauguration speech. We're at the back end of the week now.
Well, multiple parts of that question. I mean, I think the issue with technocracy is basically that last part, the state control. I think if you start with the first part, having people that are competent in areas of what they're doing, running certain segments. In many cases, like if someone's running parks, you want them to be very knowledgeable on the park and the best way to, preserve the park and things like that. So whatever that they're doing, you generally would want someone competent there. I think the problem with that mindset is that it expands to say that basically people know how lives should be lived, and that if you elect the right competent people or elect someone that then puts those competent people in charge of something, that they can have better outcomes than kind of letting people organize from the bottom up. That's kind of how that view goes. Um, and it's not really a view I would subscribe to. I think, in the US, we just had this big election. I think we're still in the honeymoon phase where obviously for Bitcoiners, the fact that Ross was freed is a very positive sign. Um, the different betting markets are kind of assessing the likelihood of a strategic Bitcoin reserve, which can obviously be relevant for price action in this space. And there's clearly been a shift in priorities. Kind of the pendulum swung one way, and now the pendulum's swinging back. I think in the year ahead, or probably the next 2 years, is where rubber is going to meet the road, or we're going to see, okay, they're talking about deficit reduction. Are they going to be able to achieve that? That goes back to my prior statement about nothing stops this train, um, and how some of these other things are going to go. So I think some things will get better, and some things will get worse, and some things will stay roughly the same. And I would probably put the deficit in the roughly the same category. And then, yeah, I think there are a lot of other things that will keep changing. And it'll be interesting to see what we're talking about if we do a podcast years from now. Like
Yeah,
what about this period is still relevant years from now?
yeah, for sure. And that brings me to the tweet that I referenced earlier, because after the debacle over the weekend of this Dollar Trump meme coin, I'd first of all, I'd just like to get your initial thoughts on that. Like, what was going through your mind when that news was coming across your desk?
Mild kind of like initial surprise to some extent, but then kind of the next thought is, no, that's on brand because we're kind of in an age of meme assets. Like their stock, DJT, is there's a big meme premium kind of embedded in that, which is to say that if you look at the market capitalization compared to the size and operations of the business, there's a big extra layer there. Um, Same thing's generally been true for kind of Tesla for a while. Um, and we even kind of see it to some extent in MicroStrategy. It's almost like the more people kind of expect that to have a premium, the more Bitcoin they can buy. Therefore, it kind of and then people expect they're going to be able to buy a lot more Bitcoin, so they buy the stock, they drive the premium up. And meme coins are kind of the purest expression of that. One way that I've been saying it before is that the whole kind of crypto industry has gone through cycles. So there was like the ICO narrative, there was the DeFi narrative, there was the NFT narrative, and the biggest criticism of all that is not necessarily the technology itself, but it's the pump and dump aspect of it, which is to say that unlike traditional venture capital, early investors and founders can extract profits and basically dump on retail fairly early on in the project's life cycle before there's any sort of sustained thing there. And so they can get rich regardless of whether or not they build anything of durable value. Um, and meme coins kind of cut base and to say we're not building anything of value, we're just gambling. And so I think it's kind of like it's up they already did Trump already did NFTs, they already did DeFi, then they have that kind of stock that itself has a meme premium in it. And then there's been a host of other projects from like Trump Stakes to Trump University to I think it's kind of on brand, ironically, to have this. But I think that just like every other narrative, this will eventually exhaust itself, where people they'll increasingly associate meme coins with things that lose money and eventually loses interest. And this might be the last major crypto cycle because it's hard to envision what the next narrative would be. We've kind of explored all the different things, and so we'll see what the next one might be. But I think that they're diminishing because they've kind of exhausted all the different angles.
Well, it's got all the way to the top. Like, who on earth in their right mind, not even 18 months ago, Lyn, would we have been talking about the possibility of a president of a country, let alone the United States, launching a meme coin 24 hours before he's sworn into office? Like, I can't, it's absolutely ridiculous. And so this is what sent me down the path of the of looking into it. And this will all tie back into technocracies as well. Parker called me last Friday night and just asked me a few basic questions. Like, have you had a sniff around of like who this David Sachs character is? I'm like, I have no idea. I like really never heard of him. Like, who is he? Oh, he's part of this all in pod with. I'm like, oh, I find those guys so repulsive. So no, I just don't. They're not on my radar. And he just like pushed me into the rabbit hole. Yeah, just have a look. And yeah, sure enough, then all of a sudden this news started coming out, and I woke up Sunday morning and was just completely like aghast. I couldn't believe what was actually going on. So I started going down a rabbit hole of who these people were. You know, a crypto czar. Like, he's been appointed as the crypto czar in Trump's administration. Like, you know, that it's classic. Just make up a title, pull it out of the hat, and give it to somebody who is an expert, right? And this is on the technocracy side of things, an expert advisor in the field of crypto. And so I immediately, because of my ex-financial markets background, you've got to look at there has to be an insider trading angle here. Well, there's got to be some kind of nepotism at play, or there's got to be a conflict of interest. And it's written all over it. And then you bring Musk into it as well, because he's leading that Doge. I can't believe they're trolling us with they literally chose that acronym to troll us, right? I mean, it's ridiculous. Department of Government Efficiency, Doge. And even on inauguration day, I saw Musk's little clip go around, him talking about Doge going to Mars and all of this kind of nonsense. So it turns out that both Musk is linked to Solana through his cousin, who he bailed out, Tesla, Solar City, back in 2016. And Sachs is heavily involved across the whole network and many projects that are building on Solana through his investments, through his craft venture fund, and through Multicoin Fund. Surely, I mean, if anybody wanted to bring those three guys in front of a judge to answer questions about that, this can only be a matter of time.
Yeah, I think it's the timing was hilarious because it was hours after Gary Gensler basically walked out of the office for the last time in his tenure, and then he spent all this past several years kind of going after some of these types of projects and really generally being arbitrary and kind of unsuccessful at the way they approached the whole space. Like on one hand, they would go after pretty clear, securities issues. But on the other hand, they would try to hold up spot Bitcoin ETFs, and their priorities were kind of all over the place, and then they wouldn't really give guidance. So this is kind of like a big, um, symbol to them on the way out is to say, well, now the president's going to have their own thing that Gensler's been going after this whole time. Um, yeah, I think around Musk's business and around a lot of those people's business, naturally what they do is they try to go towards centers of power and enrich themselves. And I think certain people will have bigger views, they generally want things that are good for the country, whereas other people are more focused on themselves, their own business, their own family. Um, and I think the next 4 years will probably be a lot of that, which is everyone wants to be close to the power. We've seen, for example, XRP spiked in price since the election because and naturally people there are trying to getting close to power. And so that's especially how a lot of these cryptos work, which is, if they can get included in like a strategic quote unquote crypto reserve, or if they can be given better legal status to operate without kind of pressure from the SEC, then that's perceived as positive for price. I think that this is probably just another narrative that the industry has to go through, which is to realize that it's not just laws holding them back, that it's actually the limitations of the projects themselves that ultimately will make them unsuccessful. But it's almost like, well, we'll see how far they go now. I mean, we'll see how successful memes can be if the president has one. I still view that generally they're going to cycle themselves out. And I think that, yeah, I think this administration will have a lot of, close contacts like that and things that maybe in prior times we would have been more sensitive to. And I think in this current era, we're kind of desensitized to it. We think, well, I mean, that's what they do. That's like no one's surprised really by these types of things because we're so desensitized to it, I think, in the past maybe decade overall.
I listened, like I said to you and Danny, you kind of touched on this, the Trump coin, and you brought up a good point, and I'd like for you to elaborate on it. But the amount of money he made overnight on that, I don't have the exact numbers. I don't know if you've looked into it, but it's a considerable amount. I mean, like, from retail as well. And I think you said something along the lines of somebody might look into the legal ramifications of that money being part of a campaign fund or something. Could you just explain what you mean by that for those of us that don't, particularly understand American politics and how it works?
Well, so in this case, I mean, the Trump insiders owned something like 90% of the coin. And so as it went to tens of billions of dollars of market capitalization, on paper, basically Trump's majority of net worth is now in this coin. Now, in practice, it's hard to begin extracting profits from that because if they sell at scale, it can crash the price. That's what we've seen with some other influencer meme coins. Um, and there were on-chain kind of signs that some of those coins were moving. It's unclear if they're fully sold, at least last I checked. And then other ones are locked up for longer. So it's still unclear kind of how much profit they're going to ultimately extract from this. But at the end of the day, the people they ultimately extracted from are kind of whoever bought in last, whoever, because there's like the insiders and then there's early traders that buy in before everybody else kind of knows about it, and then they sell pretty quickly. And then people that kind of come in late and then ride that down are the ones that ultimately hand that over. US has various campaign finance laws and various kind of anti-bribery aspects. And this case is interesting because you're basically pulling in money without a genuine product or service by having a meme coin. And if you tell someone, okay, instead of giving me money, buy my meme coin, so help kind of boost the price while I sell out of it. It's kind of an indirect way of giving someone value. Um,
Mhm.
and so it kind of technology has a habit of doing this is that people build laws around certain things based on a certain technological era, and then this new technology comes along, and then it's like, well, how do those laws apply to this other thing that kind of skates around it? And so that could certainly open up questions in the future if you see, okay, who's buying it, who's selling it, were there weird timings associated with that? Well, we'll see how that plays out.
Because if you think about like what's going to happen over the next election campaign in 3 years' time, whatever it's going to be, like the idea that somebody could raise a meme coin to help fund that campaign, surely that can't be, because then you could have nation states just buying the damn thing, right? It doesn't. It's very, very dangerous. And is that why he did it like so close to the inauguration? That's another thing that's been crossing my mind.
It's quite possible. I mean, I think it's interesting that it's right after the outgoing SEC chair.
Mhm.
It's technically before he's president. So it's an interesting little window right there. Um, and basically what crypto is kind of like security issuance around the gatekeeper, right? So historically, if you want to list a stock, you got to go through the SEC. And with this technology, people can kind of issue their own securities permissionlessly. Now, they could, depending on jurisdictions, they can face legal consequences or not. Um, and so this is now another way of raising capital. Now, I think that just like most things where the gatekeeper goes down, like if you look at, for example, books, the vast majority of, say, self-published books are not going to be high quality. It doesn't mean that, some won't be, but people, the heuristic that people kind of gather is assume a self-published book is bad unless there's strong indication otherwise. And I think that's how this whole space is going to go, which is there's no kind of limit to what people can issue, and people will increasingly they've already mostly done this, but I think over time it gets even stronger, is that people will correctly associate it with things that are not going to sustain value. Um, and to some extent, we've already turned stocks into this. Like I mentioned before, te like Tesla kind of memed itself into profitability, which is to say that there was a certain period of time where they were actually struggling financially. They had their debt was junk rated. They're not very profitable. But by making very big promises, the stock price goes up a ton. They issued then a ton of equity, bring in a lot of cash, and then actually they're in a pretty good financial position. Um, that's not that different than, ironically, a meme coin. Um, and so now you can be an individual that does it, a politician. I think the vast majority will be less successful than this one because most people are inherently less charismatic, might be the word, but also just memeable. Like most politicians don't have the kind of the public energy that we see, associated with Trump. He's always been a showman. So that's probably not repeatable. But yeah, I think this is it's kind of an interesting new reality. It's almost like cyberpunk in a way. It's, when science fiction literature would kind of envision big corporations running things instead of governments, it's kind of a little bit trending in that direction, that basically people can kind of craft their own little technological reality.
Are you going long Trump for your portfolio and your readers?
No, I'm sticking with Bitcoin.
that's that's the signal, listeners, right there. Forget the noise. And currently, I've just looked at it. $36.71 is the price of it at the moment, and I think it's spiked from what I can tell on this chart, $75. So it went from 0 to 75, and then just all the way back down to like 36 right now. So yeah. And now Jesse Myers, Croesus. I don't know if you saw his tweets today, but I'm a big fan of Jesse and his writing. And this is right on point with what we've just been talking about. So it'd be remiss if I didn't read this out. So Jesse, he says, put yourself in Trump's shoes. You learn about Bitcoin and you want some. You also learn that people can create their own cryptos and pump them. You try it out with World Liberty Financial. It works. And that's his fund, his company that is buying all of this wrapped Bitcoin and all this other nonsense crypto stuff. It works to an extent. You learn that meme coins are what work best. Your personal brand is a ready-made meme, which is exactly what you've been talking about. You launch a Trump coin meme right before you are no longer legally allowed to do so, which, again, we've covered all this. Jesse's right on it. It works. Overnight, the majority of Trump's wealth is in crypto meme tokens. But you have been told that the goal is to own more Bitcoin. So you start cycling your crypto wealth into Bitcoin. You don't want to pump Bitcoin with any strategic Bitcoin reserve executive order until you've filled your bags with Bitcoin. But once you have, then you want Bitcoin to boom. Trump's incentives are 1, load up personally on Bitcoin, then 2, load up the country on Bitcoin, enriching himself in the process. His recent moves are step 1. What comes next is step 2. I mean, that makes a hell of a lot of sense if you were to follow the money and the incentives.
Yeah, I think that makes sense. I think that's a pretty plausible interpretation of this. It's hard to know how bullish Trump is on Bitcoin apart from near-term timing. Like if he know, because like people speculate to what extent is he going to go to bat for a strategic Bitcoin reserve? He presumably knows more. Like it's possible he doesn't know yet. Like it's something he hasn't fully decided, but it's also possible that he is fully aware of his timeline and magnitude of what he expects to do there. And so he would have kind of mentally his own insider information. Um, and and in Bitcoin's case, it's not a security. Um, and so you can own it and then pump it basically. Um, and so that's probably a reasonable interpretation. I still think I have some skepticism around how big the U.S. strategic Bitcoin reserve is going to be. It could certainly surprise to the upside, but I generally take the under on assumptions. Maybe it's just because I kind of tend to be conservative in that sense. Um, they could, for example, the low hanging fruit is they just ring fence the Bitcoin they already have, or at least the Bitcoin that they don't kind of owe to others, and then say, well, that's we're not going to sell it anymore. That's part of a reserve, and then further up the scope is to say, no, we're actually going to print money to buy it, essentially. And we're going to do it at scale. We're going to acquire more Bitcoin than we already have. And if he knows that they're going to err toward the upside there, it would make sense that he'd want to own Bitcoin at some scale before they do that.
And here's a question that's always been on my mind. How would they approach printing money to buy Bitcoin?
So there's different mechanisms. That's already how reserves mostly work, which is to say that if a country wants to accumulate reserves, they essentially can print their own currency and then buy foreign assets with it, like things that they can't print. And then later, if they want to backstop their currency, they can sell assets they've accumulated and buy back some of their own currency to kind of put a floor under it if it's having trouble. Um, the U.S. has some mechanisms. The one that's kind of the most interesting and wonkish is the Treasury General Account and gold revaluation. So there's actually a clause in the Fed handbook where they can simply restate the value of the gold that they have because they currently book the gold at like $42 an ounce or something, based on the historical price it was at the time. And they could always say, well, now we're just going to rebook it at the current market price. And so they would get hundreds of billions of dollars in their cash account for doing that, which they can then spend. So it's one of the few mechanisms they have to spend without issuing debt. And they could technically book the price higher than the current price. Um, and so there's kind of mechanisms there where you could essentially create money out of thin air and then use it to buy and assets. In this case, it'd be Bitcoin. Um, and so they can use that for like some countries that are running big current account surpluses that don't want their currency to strengthen too much will instead acquire a lot of reserves. So they're purposely kind of creating more of their currency and then acquiring reserves. Um, and you could have a similar case in the U.S. The U.S. right now, if you look at reserves as a percentage of GDP among most countries in the world, the U.S. is actually right near the bottom of that because we are the axiom of the system. So we only have like say 2% of our GDP in reserves or some small number like that, and it's almost all consists of gold. Assuming it's there, it's not actually like auditable in the same way that Bitcoin can be with proof of reserves, but assuming every ounce of gold that is said to be there is there, along with very tiny amounts of actual foreign exchange reserves. The U.S. has like 2% GDP reserves, whereas most developed countries have, say, 5 to 10%. And some emerging markets will go up much higher than that because emerging markets are historically the ones that need reserves to backstop their currency. And the US, if they chose to, they could, boost their reserves to 5 or 10% of GDP and be in line with other developed countries. That'd be a massive number. And they could put it in foreign assets, they could put it in gold, or most relevant for this conversation, they could put it in Bitcoin.
Does he have that button, or does that get deferred to the Federal Reserve? Who has the final push?
I believe the Treasury has the that specific mechanism of revaluing gold to fill the Treasury General account. I believe that is initiated by the Treasury, which is under the executive branch. If I, remember my reading of the Fed handbook, I think that's where that's directed from, and I don't think that has to go through Congress. I think that's a Treasury action. There are other bigger things like the Lummis bill that go through Congress.
That's wild. Because I mean, one of the other mechanisms would be to sell government bonds to the Federal Reserve and then use that money to go and stack Bitcoin. But I just can't see that happening. I just don't think the Fed, they wouldn't allow that, surely.
I think that especially, yeah, so the Fed would generally buy bonds if there's a problem in the Treasury market, like if the market becomes illiquid. Um, and they can point to say, okay, we're doing this for plumbing reasons. They can kind of get over why they're doing it. Like in 2019, um, they basically had to stop quantitative tightening and go to quantitative easing. And they never really had a good narrative as why. It's basically because there's a T-bill oversupply problem. Um, but it wasn't so blatant as a government issuing a ton of bonds to buy something. Um, with the Treasury mechanism, some people even pointed to that during like say prior debt ceiling disputes. That if a president, is Congress is kind of holding them with the debt ceiling and the cash is running out, they have these kind of wonkish mechanisms. Like people talked about minting a platinum coin, and the reason it was platinum is because it's the one metal where like the legislation that allows that capability doesn't specify um, what nominal figure can be on the coin. So you can technically make a platinum coin of any nominal dollar figure. Um, but probably the clearer way is this TGA method of just revaluation. Um, and that's as far as I can tell, the Fed can't really push back on that, but they can push back on, hey, we're going to issue tons of extra bonds and you have to buy them. There is still some degree of government central bank independence up to a point.
Mm-hmm. Have you read The Secrets of the Federal Reserve by Eustace Mullins?
I don't believe I read that book, no.
Yeah. Get into it. You'd love it. And the reason you'd love it is because, people like you and I, we geek out on this kind of stuff. There are actual minutes in the book from congressional meetings between 1910 and 1913. So right after the meeting at Jekyll Island and right before the actual, the act being pushed through Christmas week of 1913. And it's incredible reading, and Eustace does a great job of basically putting all of this journey together of how the Federal Reserve came to be, who were the main characters, and the real reason for its formation. And when you look back at that history and you look at where we are now, so what they managed to achieve there was basically complete centralized power over the global reserve medium exchange, basically. And you're never going to want to give that up, like ever. Back to who's watching the Watchmen. These guys, and the way that the Federal Reserve was set up, like I think the president can name a specific seat or chair, but then there's a governor, a board of governors, or a governing section of the Federal Reserve, which again is separate, kind of sits in between as a bridge. And that all gets nominated by the Federal Reserve. It's really, really very convoluted. and clever. And I just can't see, if they've had 110 years of this success, them being willing to give up the power over the money, basically, which is the US dollar. And this is why we're seeing this real push towards central bank digital currencies. What's the narrative over there at the moment on that front? I'm seeing a lot of weird stuff coming across Twitter about, especially in Europe, like digital identities for this, that, and the other thing. In the UK the other day, there's going to be a new app and you'll just be able to get this and do that. And they're going for the real low-hanging fruit. Like, if you want your social security, that'll be fine. That'll all be now done on an app. You know, it's such a sick, obvious way of entrapping people into like this new system that they want to build, whilst, you know, we have this parallel system, Bitcoin. Yeah, what's CBDC? Are you on CBDC Watch? Is it something that you're clued into?
Well, some of the recent news around that is that the potentially incoming Treasury Secretary was talking in Congress as part of the nomination process, and he basically pushed back on the idea of a CBDC. Um, and so I think that's kind of the last news I heard in the U.S. During a few years ago, during the kind of the COVID lockdown money stimulus that was happening, some of the initial legislation included the idea of like a wallet that they then used to kind of like send or people that used to receive the aid, and that got dropped from that probably because it'd be hard to like kind of roll out that technology quickly enough. We've seen other smaller countries kind of dabble in that, where it's like, hey, you can get this kind of one-time payment if you use this wallet. That's probably how that would go when eventually it's launched. Um, but I think that they're already fairly satisfied with their system because they already have a lot of um, they can see most of it. Now, generally speaking, they want to see even more, um, but they already see a lot of it. And so I think that they're pretty satisfied with the current state of the system. You mentioned the construction of the Federal Reserve. It's this it is kind of different compared to most other central banks because it's this weird public-private hybrid setup. And then even like the committee that ultimately decides, interest rates and other monetary policy has input from both the federal government and from the private sector. Um, the current setup that's been in place for a long time is that of the 12 members, seven are board of governors that are elected, kind of appointed by presidents, and then the five are from the private sector, and four of them are rotating. So instead of all the Federal Reserves having their head on that board at a given time, four of them rotate, and the permanent seat is the New York one. And so the kind of the on paper goal of that is that technically the federal government has, the majority of seats at a given time, but it's not as though they can necessarily control it at the moment because once they appoint someone, it's kind of like the Supreme Court. It's almost like the fourth branch of government where they appoint someone and then they can't necessarily rescind that until their term is done. Now, during extreme periods, like during the 1940s, for example, the Treasury pretty much completely captured the Fed. Um, and they basically forced them to do yield curve control, and they had all the kind of the political backing to do so because there was a major supermajority in Congress, kind of the most centralized power we've ever really seen in the US. And it was World War II, and there's a lot of kind of like sense of unity, and they were able to get the Fed to just outright kind of monetize deficits and do yield curve control. That's harder to do outside of the context of a war. And so I do think that in the future they're going to have probably conflicts. And some people even speculate that Trump and Powell might have a conflict in the coming months because Trump will probably want the Fed to be more dovish than they are, whereas they're probably going to try to stick to roughly where they are for a period of time. And Powell's term still lasts a little while longer.
So this has to be on your watch list, right? You run a newsletter, you have a portfolio, you have people that are investing money through you. That would be a huge moment. So if that comes to pass, if there is a coming to, what would be, what are the markers you're looking for, and what do you think would happen in the market, and what would you be advising people, and how would you be managing that portfolio, whether it's Bitcoin or equities, for example?
So I think the closest comparison we have is September 2019, which was the repo spike. And so for people that are not familiar with that, basically, you know, there's like interbank lending that happens, and out of nowhere, it kind of blew out to a very high level because there's kind of a shortage of liquidity in the system. And those of us that were watching at the time were saying, on the surface, this looks like a repo problem, but it's actually a problem of too many T-bills flooding into the market. And so the Fed's probably going to have to go back to buying T-bills. And then a few weeks later, they did. So at first, they kind of put out the fire by doing repo activities themselves, and then they started buying T-bills. And they didn't want to call it QE for two reasons. One is they weren't doing it for economic stimulus purpose. It was really just to support liquidity. And then two, they were only buying short duration. They weren't buying long duration, which is how in their kind of language they decided not to call it QE, even though effectively it was. Um, I do think that probably by the end of this year, maybe at the latest early 2026, but I would assume 2025 based on most of the projections of the math, the Fed's probably going to have to go back to balance sheet increases. And I think the most likely outcome is it'll be like September 2019 in the sense that they'll kind of characterize it as a financial plumbing issue. Um, and they'll say, in order to shore up ample bank reserves and ensure adequate liquidity, we're going to cease dropping the balance sheet. We're going to go back to gradual balance sheet increases. They've already released reports showing that they plan to roughly keep the central bank balance sheet at a pretty fixed percentage of GDP after they're done shrinking it, so roughly 10 to 11% of GDP. And so I think they'll point to that framework. Um, Now, if they're pressured by, say, larger deficits, then they might push back on that more. But I think that actually under the current system, that they already are kind of planning to acquiesce and go back to gradual increases. And I think generally speaking, it'll be less newsworthy than like people in macro like me will be looking at it. We're already seeing, for example, the past two quarters. So one quarter ago, at the end of quarter three, that's right at the end of a quarter is where funding stress tends to happen. That's where there's like a liquidity drain on the system. So there was a little bit of Fed repo usage at the end of the third quarter. At the end of the fourth quarter, they didn't have to use repo operations, but there were signs of funding stress. It was very expensive for banks to get liquidity in the week or so leading up to the end of the quarter. And so that's kind of all pointing to growing liquidity constraints in the system. And I think the Fed's probably going to put that out with balance sheet increases. And generally speaking, that is positive for liquidity, positive for assets prices, because it kind of resumes debasement that's happening. Um, and it's generally dollar negative, but it depends on what else is going on at the time. And so, much like how September 2019 was kind of a risk on signal when that happened, I think probably would be similar when they switch it up and go back to balance sheet increases, later this year or early next year.
How do you keep your finger on the pulse of all this, Lyn? I mean, it can't just be like yahoofinance.com. Like what are the tools that you're using?
Well, so for the Fed balance sheet, St. Louis Fed has some of the best data sets that you can look through. Um, and in general, you can find because most of that is public information. And so you can sort through that and kind of put a lot of that together. The best tool out there is Bloomberg Terminal. But I've generally found that my type of analysis is not fast paced enough to really like I don't do a lot of active trading. And so, most of the tool sets in there are not used by me. I generally find that running my own spreadsheets, putting together information from public sources is a very powerful way to kind of stay on top of all this.
Okay, so obviously we know the MicroStrategy story, although there's a huge, I mean, there's a massive part of that story coming when they announce earnings at the end of Q1 here, because we have the new accounting rules. How do you understand how that works, and what are you expecting once they announce,
Well,
Q1?
Yeah, so under the old rules, Bitcoin was kind of treated as most negatively as possible, which is to say that if the price goes down compared to their initial cost basis, they had to book that as a loss. But if Bitcoin goes up in price, they could not book that as a gain. So they can only ratchet down kind of the cost of carrying. And so they would basically do that, but then they would have this other set of numbers to say, okay, but really this is what's happening. Like, on official like legal stuff, this is what the Bitcoin is supposedly worth, but here's what it's actually worth. Um, and now that that's been cleared up, they can basically book, losses and gains. If Bitcoin goes up in price, which it has, they can book a big profit. Now, I think that because much like how in the prior rules, investors generally knew that, so they would kind of ignore the official accounting and look at like the more genuine accounting. I think they'll probably look through the surprise kind of upside in earnings to say, well, yeah, we already kind of know that's all public information says they already know Bitcoin went up in price. So I think a lot of that's already factored in. Um, but I don't think it's an accident that we're seeing more companies run this playbook because now the accounting rules are cleaned up. I think that's probably the biggest takeaway. Not that it really affects how investors treat earnings, but that it affects how companies decide to use the strategy or not. Because under the old rules, you'd mess up your gap accounting in any sort of bear market. And now, that still happens, but then you also gain upside on the bull markets. And so, I think that investors are ready for this.
Well, just 2 days ago, Michael sent out another tweet. MicroStrategy has acquired 11,000 Bitcoin for 1.1 billion at 101,191 per Bitcoin, dollars per Bitcoin, and has achieved BTC yield of 1.69% year to date, 2025. This was right at the beginning of January. As of January 1st, excuse me, yeah, January 20th, 2025, we hodl 461,000 Bitcoin, acquired for $29.3 billion at an average price of 63,610 Bitcoin. And they're not going to stop. It's almost a weekly purchase. So if you imagine, come the end of Q1, Bitcoin is just oscillating around $100,000, and they can. I mean, is this just going to be a crazy announcement? Like the profit on the balance sheet.
Yeah, I think it'll be a very big headline number that I think investors will mostly be ready for. So
Do you
it's hard
think
to.
do you think the market is pricing it in? Do you like did for sure they've seen this?
My ex
Considering how far behind they generally are with Bitcoin.
I think my expectation around that stock is that investors trading that stock are generally more knowledgeable on Bitcoin and that they've generally priced it in. It's a pretty transparent thing to not be at least mostly priced in. Now it'll still be basically free marketing because when you have a really good number, there will be a lot of accounts sharing that, and so
Yeah.
that'll be kind of like extra marketing. And I do think that as long as MicroStrategy has the premium that it has over the net asset value, they are going to continue launching various types of securities, whether it's equity, whether it's convertible debt, potentially other methods to keep acquiring more. And to some extent, this you mentioned that we talked about the GBTC
Yeah.
premium in the prior. This is kind of it's directionally similar in the sense that in that prior cycle one of the only kind of ways that people could buy Bitcoin in a brokerage account was GBTC. And therefore, for a while, it traded at a premium. People were willing to say, well, it's the only way I can get Bitcoin in here, so I'll pay an extra 20% to have it in here because it's better than not having any at all. Um, and so it traded at a premium, and therefore there was an arbitrage where people would, they'd go long GBTC and then short Bitcoin and capture that kind of spread over time until more and more kind of other ways to buy Bitcoin became more mainstream and kind of entered the market, and that premium dried up. And that actually kind of marked the top of the cycle. Bitcoin kept chopping along at the top of the cycle in kind of that early 2021 period, but that kind of initial fuel source was gone. We could see a similar thing that when eventually MicroStrategy kind of exhausts the buyers of securities for a cycle, that could, stall Bitcoin for a year or more, and then, go back on the next cycle and kind of repeat. So it is interesting how kind of impactful they can be. They're kind of a big portal that this like, this really big amount of capital that's kind of locked in. Because if you're a bond manager running a fund, you can only buy bonds. And if you happen to be a Bitcoiner, maybe in your personal account you have Bitcoin, but you previously you couldn't really express it in your fund, and these types of securities allow you to do that. Same thing if you're you run a stock fund for T. Rowe Price or whatever the asset manager might be, and the only thing you can buy is equities. And if you happen to be bullish on Bitcoin, you can't express that. You can't really buy a spot Bitcoin ETF. And so you're limited to miners, MicroStrategy, or any other company that happens to run this playbook. That's a way that they can express their Bitcoin bullishness within their mandates. And MicroStrategy's done a really good job of saying, okay, well, all these entities have mandates. Let's give them all the securities they need, until the market kind of sends the signal that they've had enough. And at that point, they won't have a premium. And MicroStrategy will go through probably a period of time of not issuing more. But that still seems a ways away.
Do you not think he would just do a stock split if he feels the exhaustion of the market?
Well, they can do a stock split, but that still doesn't change the premium over NAV. So they're doing this. They did this recent vote so they can keep issuing equity, but that only works as long as they're trading at a premium. Because if you are trading below NAV and you issue shares, then you risk having the opposite effect of having fewer Bitcoin per share. And that's not what they want to do. So I think that's their only real constraint is for their various securities to trade above NAV.
So with these other companies that are coming out and announcing, we have Semler, we have KULR. I can't remember the name of that actual company. There's more. Like there seems to be a handful now each month. Do you just hoon into those? Are you just going along just because? I'm sure the answer is no, but I'm sure the listeners would want to know your thoughts on just because a company is announcing a Bitcoin strategic reserve or playing the MicroStrategy play, should they be buying it? I don't want anybody to be selling Bitcoin to buy equities, that's for sure. But what's the way you think about it and are approaching it for you and your investors?
I've been primarily investing in Bitcoin itself, and then I have been long MicroStrategy. Um, and the kind of historical reason for that is similar to why other people buy MicroStrategy, which is when I, wanted to express Bitcoin in the portfolio, there were not spot ETFs. And so MicroStrategy was one of the better ways to do that. And then currently, even though there are spot ETFs, it's the way to do it with, say, some fixed rate leverage attached to it, or kind of longer duration leverage, I should say, attached to it. Um, and I still think that MicroStrategy is going to be the best vehicle for that for a while, because a lot of these other companies, it takes time until Bitcoin is a big percentage of that company's value. Whereas MicroStrategy's done this long enough and big enough that they're almost entirely a Bitcoin company now. The size of the software business is a tiny fraction of the value of the company. And that's not the case for these other ones yet. And so I do think that eventually we'll also reach the point where when these companies announce it, they won't get the spike that they currently get, at least for as like a certain part of the cycle. So I'm not chasing every single one, but I am making note that more of them are coming to market. And I'd also point out that even among bigger companies where this is not happening, there are generally vice president level people that are really into Bitcoin. And so it's not to say that like everybody at those companies is not on board with it. It's just that they're not in the majority. Right now, the way this kind of works out is that on average, lower quality businesses are more likely to want to do this because they need a jump start. If they say, look, we're not growing, but we're profitable, it's really hard to improve the value of our stock from our income statement. So let's shake up our balance sheet That's initially why MicroStrategy got into it. They had growth headwinds, and then they had a big cash hoard that the market was not rewarding them for. So they smartly went to Bitcoin. And we see generally other value type of stocks do this. We don't really see the big growth ones doing it because they generally are already getting what they want. Um, I think one probably to watch is Meta, just because Zuckerberg has such a big controlling stake of the company. And so there's kind of like a potential unilateral decision there that could be interesting to add Bitcoin to their balance sheet. But for the most part, I'm not chasing every single one other than just making note that this is becoming more of a strategy, and therefore that has implications for Bitcoin's price.
All right. It's at the time where I told you I would promise I would let you go. Do we have any time for a few more questions?
I have another 10 minutes, yes.
You know, another 10 minutes. Right.
Yeah.
First of all, we've not talked about your book. So we must shill that because it's an excellent book. Broken Money. And you didn't self-publish. You
Went through
used
time.
Saifedean.
Hmm?
You went through Saifedean's publishing house.
Well, actually did decentralized publishing, so it's actually published in multiple venues. So Saifedean's publishing house is the one you showed up. That's the premium hardcover of the book. It's got the
Mhm.
cloth cover with the dust jacket. That's
Yep.
the Saifedean version, and then it's published from two other manufacturers as well. So um, yeah, it's actually decentralized published in a way.
So who are the other two then? Because usually you get locked into contracts and there's no way that you can publish with someone else. That's interesting.
The other ones are Amazon and Ingram. Ingram is the big wholesaler that sells to bookstores. I will say that Safanines is the I find it to be the most efficient in terms of how that supply chains run. But yeah, there's three different producers, and I've retained full rights to the book, and uh, yeah,
And what's been the feedback?
very positive. So my initial, I was pretty sure it would sell well. My concern was it's like a 500-page book. So how many people
Yeah,
actually want to read a 500-page finance book?
it's a tome.
But my assumption was there's actually already really good short Bitcoin books out there and short money books. And so what if someone took the time to really kind of walk through the entire thing, like pretty much the entire history of money, not obviously every note you can touch on, but the entire kind of high level history of money, the mechanisms for how the current system works, and then how Bitcoin kind of enters the equation. And so the combination of having kind of a Bitcoin book without Bitcoin in the title, it's a book about money, like money and monetary technology, which of course Bitcoin is going to be a very big section in the final third, but it's a book about money. And so I assumed people would like it, but you can never be sure. And so far it's only surprised to the upside. It's one of the best-selling books in the genre. It's well received, and then what always surprises me is there's like really big capital allocators that give it to their friends or people that give it to members of Congress, for example. And I'm always kind of surprised to find out that someone read it, and I would not have guessed that they would have read it.
It's amazing when you hear those stories. Brian DeMint wrote his latest book is called Parallel, and I was humbled, and so was Canute, to be invited to write a chapter for that book. And Brian called us up, and he's like, "Guys, like some hedge fund manager just called me. He's going to fly me over. He's given the book out to all of his investors, and I'm going to come and do a presentation over there in front of like 150 high net worth individuals." Like, whoa, like that's amazing, and this is why we need more information out there. There aren't enough Bitcoin podcasts, people, believe it or not. There is not. We need thousands more, and there aren't enough books either. We've just got to keep pounding the table on that. So ego death, we have to touch on ego death and your involvement. What's coming in 2025 that you are able to share? I know there's probably a lot of uh, confidentiality around some of the companies that you're investing in, but recently Ego Death upped their investment in a key company, I think, here in Europe, and I've been a long-term fan of them and their work, and they've been a long-term supporter of the show with Relay. Is there? What are you seeing? Are you seeing? Is the future bright, Lyn? What do you see behind the scenes?
I'm certainly bullish. I think we're kind of in a sweet spot right now where companies are able to get funding that they need, but we're also not in a place of very high valuations. So it's kind of good for both founders and investors to have a good sweet spot. Um, One of the things I've kind of pointed out before is looking at data that, TVP and others put together. The broader crypto industry has had like tens of billions of dollars of VC funding and
I
has
know.
very little to show for it at the end of the day. Bitcoin has actually had very little VC funding, Bitcoin companies. And there's a handful of big ones like, Lightspark that were notably given a lot of funding, but outside of like a small handful, there's really only a few billion dollars put to work in the entire ecosystem over a decade. And Bitcoin's done very well, uh, even with this kind of scrappy self-starters, small amounts of funding. Um, I think there's a couple things that I find the most interesting. One is finding businesses that we know work, say in the US, and repeating them elsewhere. So like, and that's, basic things like selling people Bitcoin without a casino attached to it, right? So historically, when people wanted to buy Bitcoin, they go to an exchange, and there's a million options of like dog themed money they can buy and get distracted by instead. So if you send someone says, well, where can I buy Bitcoin? You say, well, this exchange, and then they go there and you say, well, did you buy Bitcoin? And they say, no, I bought this other thing. And then it's like, that's an issue. So having just simple ways to buy Bitcoin without distractions, I think is not the most exciting thing, but it's something I think the kind of like the world needs more Bitcoin podcasts. It needs more simple, non-distracting ways to buy Bitcoin. Um, I'm also really bullish on the idea of socials and money mixed together. So things Nostr related, basically. Um, and having like a wallet where you can look people up and pay them kind of automatically, kind of like an open source version of Venmo, I think is a very bullish idea. And I think we'll see more of that in the future where wallets have to incorporate some degree of social connection to make payments easier. Um, and then there's other companies that are like using the Bitcoin blockchain for non-monetary purposes and also non-spam. Like so things like open timestamps, there are ways to make use of the fact that Bitcoin is an immutable database to kind of prove that some other document was not changed without sticking the whole document inside the Bitcoin blockchain and kind of, um, cramming it up. So I think that the future's bright as far as I can tell. And I think that the whole space is in a pretty good state. I think the thing that will probably keep taking longer than people hope is medium of exchange at scale. Um, I think the interest in people like right now, stable coins have kind of captured that attention. Um, and then, in addition, just people just they generally face frictions with capital gains taxes and accounting applying for all these things. So I think that that's probably going to take longer to fully take off than people think. But it's important to keep building the infrastructure along the way so that it's ready to handle that as more people want to use it for that purpose.
Yeah. Okay. Final question. I promise you. If you had one last orange pill left to give to somebody, who would you give it to and why?
I would say, I think most people would probably say a very powerful person like the president. Like I don't consider the president to be orange pilled. I think he's crypto pilled, but not really orange pilled. Um, but I tend to lean in the other direction, which is to say that I would want the types of people that the Human Rights Foundation works with to get it more. So my favorite orange pill would kind of be someone in a high inflation area or a place where bank accounts can be seized and are not free. Um, because you could change that person's life dramatically. So basically, my favorite orange pill would be changing someone's life, and it's someone that we don't know versus changing one powerful person's mind. It's probably how I'd approach it.
Yeah, I love it. Well done. And I think people need, if there's ever an advert for somebody to go and check out Nostr, if they've not checked out Nostr, is to know that we have Savage Lyn on NOSTR, and we have, kind of corporate shiny Lyn on Twitter. So get over to NOSTR, people, and go and follow Lyn, because that's where the fire is. That's where the real signal is. And I know you and Jeff and many others over at Ego Death are big NOSTR fans, as am I. I'm really enjoying that platform as well. So we'll leave it there. Thank you very much, Lyn. How can they reach you? Where would you like to point them to go find the book? And where are they likely to see you this year in person, if anywhere?
So for the book, they can buy it on Safety's website, or they can buy it on Amazon, Barnes and Noble, any major bookseller. They can generally find it. They can also go to lynalden.com. And as far as conferences, like we mentioned earlier, I'm kind of not planning on doing a ton of conferences. I'll see if I end up going to the main Bitcoin conference this year or not. And so actually right now my conference schedule is pretty unclear.
Are you doing Bedford?
That one I have not fully decided on yet.
Okay.
It is a little challenging to get there
Yeah.
at that time. But
and it's Bedford.
I do like, I really enjoyed it last time. I had never been to the UK before, actually, so it was actually really
Really?
cool. Yeah, I'd never been there.
No
Um,
way. That's
never.
amazing.
Yeah, yeah. So
That's truly amazing.
I
A
finally
weird
had a
thing again.
catalyst.
A weird thing again. We started with a story about Parker. I'll end with one. Parker came to Prague last year, and that was the first time he'd ever been to Europe.
Oh wow.
I know. I'm like, what? And he loved it. So yeah. All right. Well, I tell you what. People, go follow Lyn on NOSTR. Look out for an announcement, a conference you'll go to, and then get a signed copy of the book, and go listen to what she has to say, because I've been following you for as long as you've been in the Bitcoin space, because I think you started really writing and leaning in around 2019, if not mistaken.
Around that time. Yeah, my
Yeah,
first article was 2017, but it wasn't really until the 2019, 2020 period that I started to write more about it.
that you would class yourself as fully pilled.
Yes.
Well, thanks for coming on, Lyn. And yeah, I'll bump into you, I hope, at some stage this year.
I look forward to it. Thank you.